I made a number of mistakes when I first started investing, which includes mistakes that led to over $10,000 a day in losses several times. And no, I was not a day trader. But I want to share these mistakes with you in hopes that you will not make the same mistakes as I did, hopefully. Hey boys and bears, it's Steven here. On my channel, I try to share not only the good aspects, but also the difficult times when it comes to investing. When hits the fan and our investments drop big time, it teaches us a valuable lesson that we will never forget when we're the ones that's going down that difficult path. So why don't we keep an open mind in life to hear what other people learn through their experiences, and sometimes it could actually save us a lot of headaches and heartaches. Kind of like not dating that guy or girl because all of your friends warned you not to do could potentially save you from some heartache and headaches. But I digress. So on to the few lessons that I want to share with you today about things that I learned in my journey in investing. On to lesson number 1. Ignore the noise. Living in the 21st century, there is just way too much information, should I call, noise. In investing, that could be the news, social media, news subscriptions, your friends, and even that tiny voice inside your head that's sometimes really loud and annoying, all trying to grab your attention. Some of that information may very well be accurate and even well-intentioned, but let's just keep the context in mind when we're looking at that. So this is what I mean. If the news headline says that we are in a correction, should you go out and sell right there and then? What if it says that the CPI data this month is horrible? Should you go out and sell your stocks? Well, if you ask me, this is a lot of information to process, and it's so easy for us to second guess ourselves if we should just follow whatever that news article there is saying and just go and sell it off. This is where following your strategy is very important. And then there are cases where the information is just misleading or just straight up wrong. If your reason for getting into an investment is because some YouTuber just bought some the other day, or you saw on Twitter that some guy's recommending that, well, you're going to be in for some nasty surprises. That's why I always say, do your own research and not just follow someone else's research. Convince yourself that that is the right investment for you and not for your Uncle Bob. Let's say, oh, but I'm a YouTuber too. Oh, but just trust me on this one. Which brings us to lesson number 2, fear of missing out, or FOMO. While it's good to ignore the noise, I'm not saying don't read the news or don't go on Twitter and YouTube. That's not my point. Rather, you can consider using that as a source of inspiration or to kickstart your research. But just don't use that information to buy into or sell out of because you don't want to miss the train. From my experience, it is easy to buy into or even sell out of a stock due to fear of missing out. And this is what I mean. When you see a whole bunch of posts about how well a stock performed in the last 12 months, you might be like, dude, what the heck, dude? I've been waiting forever. Maybe I should just buy it now. Or maybe you've been waiting on the sidelines for a market drop and you think that it's not the right time just yet, but you FOMO'd in because all your buddies got in and you don't want to be left out there alone. Now on to our next lesson. Lesson number 3. Selling low, locking in your losses, all due to fear. I get it. Fear is real. But then so is losing money. If you're invested in any stock around the world, chances are you're going to have at least a few stocks that's not doing too hot. Whether that's down 10% or down 50%. Well, it hurts, and I know that. I have some stock that's down big too, so I get you. It's okay, don't be shy, as long as it's operating per your strategy. So say your strategy is to follow the fundamentals of the businesses that you are invested into, and the fundamentals are as strong as ever, then it might not be a good idea to sell out right now because you'll likely be selling at a loss just because you fear losing more. Let me tell you, I learned this the hard way. And I can laugh about this right now because it's been so long already. But there's nothing like losing more than $10,000 in one day and doing that several times. And that will definitely teach you a lesson, as you would imagine. If I just stuck to my belief and didn't sell out because I was scared of losing money, maybe that $10,000 and more would just stay as paper losses. But in the thick of it, I sold a good amount of that $10,000 worth of stocks the first time it happened to me, locking in my losses. Luckily, I did a little better the second time it happened, which was actually the next day, where I only sold a portion of that. Not great, but hey, I'm learning. By now, my account dropped more than $10,000 a day, more times than I can count, but luckily, they stay as paper losses. When things go against my strategy, say the fundamentals of the business is going south, I may very well decide to take my losses and call it a day. If it is already way past where you know you should have sold, but you didn't sell it because you were scared, you forgot about it, or whatever it was, well, it happens. Don't give yourself such a hard time for it, but do what you need to do, fix the situation, and learn from your mistakes. Which brings us to lesson number 4. Don't overestimate your risk tolerance. Today, I'm about a third invested in boring assets, aka index funds, such as the S&P 500 and the Russell 1000, with the rest mostly in tech, growth, and cryptocurrency. There are certainly weeks and months, and now it's definitely one of those times where my portfolio feels like a roller coaster. But figuring out your risk balance is critical, and I found this balance to work well for me. Sure, I might be slowing down my potential growth to riches, but I'm also reducing the chance that I might have to work until I am 80. So I'm okay with that. I guess overall, I'm a pretty responsible person, tooting my own horn as my wife would say. But what I mean by that is I'm not the type to go all in on a meme stock or buy zero DTE options. As a result, I lived in the ETF land in my retirement account for 6-7 years before I got into individual stock picks and got a real brokerage account. When I first got into individual stocks, I think I did a pretty good job increasing my allocations in individual stocks slowly but steadily. So that way I can give myself space and time to grow and learn. Where I started feeling overwhelmed was when I eventually reached about 30% allocation in tech and growth names, where I thought to myself, oh yeah, I got this, I'm just gonna double it. That's when you know it spells trouble. So I decided to double my allocation in tech and growth names to almost where my portfolio is at today, but doing so in a short time frame. With the same daily drawdown of say 3% of my portfolio, you'll imagine that the dollar amount of the drop is drastically different before and after I made that change. Because I did it all of a sudden, I was not prepared for this. And it also taught me the valuable lesson of tailoring my allocations based off of the volatility of my specific investment. For example, holding the same value's worth of Microsoft stock feels drastically different from holding the same amount of Ethereum, which is so much more volatile. Sure, the return of Ethereum in the past few years has been more than that of Microsoft stock, but the volatility caused me to check my phone way more than I should, and it's not healthy. On to lesson number 5. Not fully understanding the business before getting into that investment, or not knowing the coin before getting into the cryptocurrency. This really goes back to what I always say. Do your own research and understand what you're buying before you do that. So remember lessons 1 and 2? Well, the noise and my FOMO caused me to make investment decisions without really understanding what I am putting my money into. So when the stock drops, I'm left confused whether or not I should sell the stock. I mean, is a 10% drop bad? What about 20%? You get what I mean. So understanding the business fundamentals helped me understand that things could go sideways or down. That's completely unrelated to how the business is performing. So if the business is growing and is doing as well as ever, should you sell off? And this brings us to our final lesson, lesson 6. Maybe consider selling or decreasing your position size if the macros are trending down. Some of you might be like, okay, now you're just timing the market, or dude, what the heck are you doing? Well, historically, the US stock market recovers from a recession in 17 months, and that's on average. While I see many differences between the US stock market today and the Japanese stock market in the last 3 decades, it wasn't until very recently that the Japanese stock market recovered back above 30,000 points after 3 decades. If you ask me, 3 decades is a very, very long time, and I'm not sure if I have the patience and be able to withstand that. And we should also remember that the US stock market going up is just an assumption. It may or may not be the case. On top of that, we're talking about the entire stock market here, not individual stocks, which gets even crazier sometimes. Amazon, for example, took roughly 10 years to recover after the dot-com bubble burst. Cisco, a darling in the dot-com era, still hasn't reclaimed its peak in 2000. What I'm trying to say here is, let's remember that with any investment, anything is possible, and with the broader markets down, it's not a bad idea sometimes to consider selling at least part of your portfolio. And this summarizes the 6 investment mistakes that I want to share with you all. And I would love to hear from you if you have any questions, feedback, or just want to say hi. So please comment down below. And if you haven't already hit the like button, it will help me so much if you can like this video and also consider subscribing to this channel for more content like this. Thank you so much for watching and hope to see you again soon.